So Nike is in jeopardy of closing below this weekly buys level at $95. You can see that a bit clearer on the weekly chart. You can see how price dipped its toes outside of the weekly buys level. However, price still closed on the weekly chart 2 consecutive weeks within this weekly buy zone. And what was the cause of price potentially crashing through this level? Well, it was earnings. So before we continue with the analysis, we're going to look at this article. So shares of Nike dropped on last Friday, after they reported third quarter earnings for 2024. Company's results fell short of management's previous outlook, and so that's why Nike fell. So in the third quarter, Nike's revenue was less than 1% year over year due to higher prices due to inflation. These strategic pricing actions were intended to improve the company's profit margins, which they did, but not by as much as management had expected. For Q3, Nike had a gross margin of 44.8%, even though management had expected gross margins of at least 44.9%. However, management also expected year-over-year earnings growth, but its diluted earnings per share fell 3%. While financial results for Nike were respectable, the company's growth is near zero, and management expects revenue to pull back in the first half of fiscal 2025, which starts in June. Therefore, for calendar 2024, there's not much to look forward with Nike. The company's revenues could drop slightly, and its profits could grow by a meager amount. For a stock that trades at a premium valuation compared to many of its shoe stock peers, there's just not enough growth with Nike to excite investors. That said, this has been a great company over the long term, so it's worth monitoring in the coming years for signs that its outlook is improving. I don't think Nike is a growth stock, and therefore, if I'm looking for alpha, I'm not investing in Nike. Now, let's say if prices eventually close below this weekly buy zone, where's price heading next? Well, I would anticipate price filling this gap down near that $90 level. Let's zoom out to see where that $90 level is in relation to price action. So, as you can see, price fell from the 128 level down to 90 and then moved higher. So this is where I would expect prices to stall and then potentially reverse. Now we're going to zoom back down to the daily chart, and I want to see what's below that $90 level. Yeah, so all this trading tells me that if price gets down to this level, it's going to stall out. Now, going back up to the weekly chart, if prices close below 90, the ultimate bottom is only $7, $6 below that. So let's just say between 90 and $84. I would anticipate price being at a discount, and I would anticipate price eventually reversing and moving higher. So no trade setup at the moment. Personally, I would put an alert at 90 and then look for bullish reversal patterns on a smaller time frame, and then potentially getting long. Thanks for watching. Subscribe, please like the video.